Hello and welcome to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the more interesting news stories in the mining and exploration space. Joining me this week is Joe Mazumdar, editor of Exploration Insights. Joe, welcome back to Kitco.
Thank you, Paul.
Been quite an interesting week. Started off with a great big transaction in the royalty space. We've had a lot of action on the geopolitical front with President Trump, and gold ETFs have had biggest inflows for 5 years. But let's start with the M&A transaction, and that was Royal Gold looking to pay $3.5 billion to acquire Sandstorm gold royalties. Joe, evidence of more consolidation in the royalty streaming space?
Absolutely. So the week before that, or a couple of weeks before that, almost a month, we had Origin Royalties, which is here at this conference, and they were purchased for their 1% NSR on the Silicon Merlin 16 million ounce deposit by Triple Flag Precious Metals. And so definitely those precious metals, the royalty and streaming companies are in an acquisitive mood. It's hard to find good assets. And so besides finding these sort of early assets like Origin have, there's more consolidation to be had because their cost of capital is very low, and they could do these transactions. And I think Sandstorm hit potentially a dead end with respect to trying to grow to that next level. That would have put them on the level of being an ultimate acquirer. It put them at the level of being a target. They've got some decent royalties, and then they have the Horizon Copper that fell into it. But in all, it raises the company up, the acquirer up to a different market cap and makes them much bigger and gives them more visibility in the market.
Well, the royalty and streaming space is certainly one where, go big or go home is a tenet, because obviously the cost of capital is the driving force in being able to compete for the biggest and best royalties and streams out there. With this transaction, if my memory serves me correctly, Royal Gold will add their market capitalization will get to sort of 15 to 18 billion, still way behind sector leaders Franco-Nevada and Wheaton Precious Metals, but really consolidating their third place. And as you mentioned, Sandstorm was in that sort of 5, 6, 7, not really sort of able to break out.
Yeah. And so their cost of capital was what it was, but then they were competing. They were like in this no man's land between competing with little companies that were looking for smaller things and bigger companies that might want something that Sandstorm would want, but they don't have the same cost of capital as the bigger companies.
Now, in terms of the consolidation of the royalty streaming space, with metals prices at high levels, companies are better able to have better access to finance, equity financing, etc. Does that mean there's a slowdown in deal flow, and therefore, if royalty streaming companies want to grow, consolidation is the way forward?
Absolutely. So, royalties do live these cycles. And so when the markets are negative, the commodity markets are negative for companies like Franco and people that are well capitalized with decent free cash flow, that is the time for them to harvest, to help companies out and to access royalties. Now, that would be the time to seed the investment. And now when prices are going up, now you're harvesting. You're reaping the benefits of those investments. But also, when you're looking at consolidating and you think the price is going to go up, M&A usually, predates that. But we've seen a big rise in gold, but we're seeing continued consolidation. And I think, that's what people want to see.
Okay. Now, also this week, the World Gold Council said that inflows into gold ETFs was at the highest level in 5 years in the first half of the year, 3,616 tons now in gold ETFs. The US led that, increase in inflows with more than 200 tons. Asia also added 100 tons. We are here at the 2025 Rural Symposium. WGC, World Gold Council strategist Joe Cavatoni was here speaking, but he didn't speak about that. But why are there now inflows into gold ETFs, and what's taking investors so long for those inflows to turn positive?
Okay, so what we saw during the beginning of the year, we saw inflows, and we saw a lot of North American influence up to about April. Then we saw some months of negative, outflows. And the fact that the North American investor ETFs are coming in, that's a very big positive sign. But it's underlain by more uncertainty not only the potentially these new tariff deadlines, geopolitical, probably around that time, Iran and Israel might have added people, and so all of that has sort of conspired to make people a little bit more uncertain, and so the attraction is alternative investments, and gold is the one that people would go to, and they flock to that, and that has obviously had a knock-on impact because it's North American led funds into the equity market, and that's where we see the rise in equities. If it's central banks buying gold, Asian ETFs, or even European ETFs, we don't see the same knock-on impact on equity ETFs like the GDXJ, and then the knock-on impact on big companies like your Agnicos, like your Newmonts, like your Francos and that.
Are investors waking up to gold, or perhaps better said, are they remembering the role that gold plays? Here at the event, a couple of speakers have mentioned that investors are holding perhaps on average 0.6% allocation to gold, where historically that is perhaps closer to 2 to 3%. Are investors reawakening to what gold does for them?
Like if you looked at most central banks, the banks that got the gold early and had that gold to back their currency have 60 to 70% of their reserves in gold. Whereas the countries that were coming up and coming, like China, started with 3 to 5%. And so their incremental increases are suggesting that around 10% makes sense for a country. And like you said, like most individuals don't own gold. You have that average, but that average has probably got a big spectrum in terms of ownership. But I think people are not looking at gold thinking, okay, I'm going to make a 20% return or 100% return. They're more looking at gold thinking, I need to own some and just forget about it.
That's the insurance aspect.
Yes, and that's the haven part of gold, that they're starting to find that cryptocurrencies isn't a substitute for that. And so that is, and it's still probably not totally absorbed by the market, but you read the newspapers, I assume, and you see the news on the television or on your phone, and you can see more people from the general news services or newspapers are talking more and more about gold, talking more and more about mining, and so that's hitting the public. So when that's hitting public, you don't have to explain about gold. You don't have to explain about it. People are already looking at it. And so that's, I think, what's driving a lot of this as well.
Now, the attendance here at the Royal Symposium is more than 1,400 people, double what it was last year. And in the hotel room, I've been seeing advertisements for buying gold on the television. So that narrative really seems to be taking force.
Yeah, and I think, and you sort of get worried about that, in terms of a topping of the market when everybody's talking about it. Is there any opportunity left for me? But if you look at where gold is still looked at as this haven asset, and there's a lot of these people that are under allocated in it. So there's still a push that gold could go up, but I don't know if all that positive sentiment would necessarily go to equities, again, unless it's North American ETFs, institutional investors are investing. That will translate to people like the delegates here, other people investing in equities to get that leverage, which leverage they have seen in the first 6 months of the year.
Okay, well, let's change track and talk about red gold, copper. This week, US President Donald Trump said he might put in a 50% import tariff on copper. That drove COMEX futures to record levels of almost $6 per pound. Joe, lots to sort of dig into here. Tariff theory, protectionism, etc. What's going on?
Well, from what I understand, there is obviously a gap between what they import in terms of cathode production and what they produce. And the constraints are smelters and the lack of oxide and secondary sulfide chalcocite, SXCW, solvent extraction, electrowinning, amenable deposits, because these things tend to be at the surface. We've mined a lot of them. There's less of them. I know Ivanhoe Electric, that's what they have. I know Arizona Sonora, which is at the conference, that's what they have, but there's not a lot of those sorts of deposits. So then you produce a copper concentrate. The copper concentrate, if you do have a permanent project, would have to be smelted elsewhere, because the smelters that exist right now in the States are at full capacity, which are only two, really, Bingham Canyon and the one in Miami. but they're all owned by companies that are feeding it with their own material. Freeport and Rio Tinto. So you would have to leave the country. And then you would come back with a tariff if you brought it back as cathode, but more likely it'll come back as a car or a washing machine or something like that. And so if you're gonna push for copper, saying, okay, I don't want your copper, I want to support the local industry, they gotta support the local mining industry to permit these projects, and then they gotta support the building or renovation of a lot of these smelters to actually treat the concentrate to get you that copper cathode.
Now, Chile and Peru, big copper producers, they export copper to the United States, although the United States is not their main client. They've asked for clarification, and it does seem, to a certain extent, of President Trump's put a figure out there to see to what extent or not it sticks before he actually makes his final decision. The president ordered a Section 232 under the 1962 U.S. Trade Act review of copper earlier this year, and that's due to report, I believe, in August or September. So it seems he's still got a bit of wiggle room before he decides what that final number may or may not be.
He's always got wiggle room, and that's, the more you say something and then you change your mind, the more people discount the headline number. The 50% tariff, even if it's 25%, that puts a lot of manufacturers in the States at a bit of a quandary, because they can't get it anywhere else. And so what you're seeing is a run up in the price, but people are looking for inventory. So you're seeing the inventory on the COMEX being drained. And then you're saying, well, who's actually putting things into the inventory? Nobody's putting it in.
Well, you're seeing more copper coming into the United States because people are able to take advantage of this price arbitrage between the COMEX price.
Yeah, but you don't always have that availability. I mean, not a lot of people have loose copper cathodes. They usually sell this forward to a trader or to a manufacturer. They're not like, oh, hey, I've got a couple 100 million pounds here. We'll sell it into the arb market. So when I worked as a trader for Phelps Dodge, the only thing we imported into the country was Cerro Verde, which at that time was SXEW and produced cathode. That cathode came into the States. And we played the arb. At that time, the arb was no more than 1 to 2 cents usually. Sometimes it would blow out to 10 cents. That was 10 cents on $1 per pound. So 10% of the price. Sometimes here it is ballooning out to like 25% on a much higher copper price, and that's ridiculous. I mean, that doesn't happen in a natural market. That was happening in a natural market because the Chinese were draining all the London Metal Exchange inventories that were close to them, and as they drained all those inventories, they came right around, and then you would have an LME inventory in New York with a COMEX inventory right next door. This one was worth 10 cents more than that pound.
Well, Phelps Dodge became Freeport-McMoRan, and in its first quarter results, Freeport-McMoRan talked about the arbitrage being 50 to 60 cents. They said that's going to earn them, if it stays like that, an extra, I think, $800 million this year. Be interesting to see what they say in their second quarter results and how they change those figures.
Absolutely. And they've got some growth projects here, but your incentive to build them, I don't know if you can count on that arb being that wide for that long, because historically it's never stays.
I think that's one of the interesting aspects. One of the legitimate functions of implementing tariffs is to protect an industry or business you want to grow. Now, if those tariffs are implemented this year, it perhaps overlooks the fact that it takes several years to develop new copper supply, to build new smelters, and so there's going to be a time lag in which the United States could potentially not have enough copper.
Well, they would keep importing it, but it would be at a higher cost. So everything that you're buying with copper in it would cost you more, because more likely the purchase managers would increase to pass it on to consumers. And so we would see more inflation.
Okay, let's go down to Ecuador. Dundee Precious Metals, they got their final permit for the Loma Larga gold copper project in Azuay province, I think it is. Good news for Dundee. They're very active in the M&A space. They've got a transaction underway, potentially another project in the pipeline to build.
Yeah. No, I mean, I've been to that project many years ago when it was IM Gold. It's problematic because it's at the headwaters, and it's like a protected area, and the way you had to drill it was kind of complicated. You had to use track vehicles. You couldn't make roads, and so that's a positive for Ecuador. But Ecuador still got issues with with water. They still got issues with criminality, and so yeah, let's see how that goes. Yeah.
I don't think there's too many criminals in the Kimsakopcha Paramo, but I think one real positive here, Dundee's got one of the best records in terms of environmental performance. So if any company is going to develop a project in a potentially sensitive areas, you can perhaps do better.
And I think metallurgically they're pretty aware. And that's metallurgically a bit complicated because it's an argite and it's in the base of a high sulfidation system, and then you'd probably need an autoclave.
Okay, I want to finish off by a quick trip to Yukon in Canada. This week, Banyan Gold announced a resource update for its Allmac project, increasing to 7.7 million ounces, noticeably with a high-grade core defined there. Also this week, the territorial government said, a report came out that said the Yukon Gold slide was preventable, but they're also really pushing for the sale process.
The Victoria Gold.
For the sale of the Eagle deposit to be completed this year. Quite a lot to unpack there in Yukon this week.
Yes, I mean, that would require people to have a very short memory in terms of saying, okay, like, is this deposit going to work? Because the one next door didn't work. And so they'll have to prove that this is something different. The fact that you're on grid power doesn't change the fact that Victoria Gold was also on grid power, and then Yukon doesn't have a lot of power, period. It is better than being in the middle of nowhere and having to use diesel power, but you don't always have that power because the Yukon has its own constraints. I would say, like in terms of, I don't know what they're considering. Is it a heap leach? Is it milling? I don't know if they have the grade to do milling. The problem with a lot of these projects that tend to be remote, the capital cost on those tends to escalate. I think Victoria Gold built the project. They had a problem, it's the seasonality of the winter and everything like that. That's what put pressure on the heap leach and recorded the failure. But I don't believe any of that heap leach material was agglomerated either, which might have helped with respect to stability. So there's learnings there from that one that they could readily be applied to what they're doing, and hopefully that's what they're doing.
Excellent. Okay. Joe Mazumdar, thank you very much for joining us today.
Okay, thank you.
And that's all for now. I'm Paul Harris, and this is Kitco Mining.